Hello to all our Friday visitors. Welcome to the Facebook crowd to whom this broadcast is now public. Apparently there was a little squiggle needed and nobody explained that to me. At any rate, the downtrend in US equities is getting bigger and wider, as the saying goes, and entering what could just be a dark chasm of inquitentiousness. We're seeing 1.5% loss in the Russell yesterday, and even the Dow finally succumbing to pressure. The dollar continues down on mixed data, building permits surprising to the upside, but both jobless measures in the red, quite putting the COVID recovery narrative to shame. Import and export prices up month on month, but housing starts down 100K. Philly's manufacturing index lost 3 points, but that's only half the expectations. While in Canada, the contraction in ADP's non-farm employment figures deepened tenfold in the past month. We should be looking out this afternoon GM time for existing home sales, February's purchase managing indices, and the Fed's monetary policy report. The red wash was upon Europe again on closing last night, even though, as you'll remember, there were signs of optimism when markets awoke. That's 1.40% loss for the FTSE, 243 in Portugal. In Germany this morning, producer inflation is up 1.4% month on month for January, pushing the yearly figure up to 0.9. And we're seeing the pound coming under pressure as retail sales came in this morning with a dastardly 8.8% deterioration for January. Retail sales collapsing by 8.2% month on month as well. Still, consumer confidence is at minus 23. That's its highest since COVID clawed its way into the Commonwealth cold. And government borrowing is now at £270.6 billion for the fiscal year. Later this morning, we'll be getting all three PMIs from the UK and across the Eurozone, and then we'll see how the numbers crunch down. China is smiling this morning at a 0.4 to 6% rise in indices. The Hang Seng is down 0.4 and the Nikkei 0.72. The Australian dollar overnight gained 0.25% after a half-point reduction in the nation's manufacturing PMI, but 1.5 down when it comes to services. And retail sales for January added 0.6%, disappointing expectations of 2%. The yen is also taking up some slack as Friday's manufacturing PMI comes up a tad to a finally expansionary 50.6, but services remain in shrink zone, dropping to 45.8. With Texas refineries slowly warming, oil plunged nearly $3 a barrel before recovering a tiny bit, despite a much better than expected 7.25 million barrel drawdown by EIA numbers, and Bitcoin wavering on either side of the zero mark as the new U.S. Treasurer, Janet Yellen, says she may be looking to regulate institutions dealing in cryptos. Still, digital dollars do exist in Bermuda, where you'll now be able to buy rum with them. The GameStop caper continued yesterday with congressional hearings as lawmakers slammed Robinhood and Reddit pundits for fleecing retail traders, and earnings yesterday saw Walmart disappointing with a $1.39 EPS despite a $152 billion, 7.3% revenue gain year on year. Nestle disappointed with $22.4 billion, and both Daimler and Airbus impressed to the upside. And this morning, Renault reported an €8 billion loss for 2020. Today, we'll be looking at Danone and John Deere. And so another year comes to a close. Sorry about that. Again, I'd like to thank the folks at Teletrader for their charts, at OBS for making it all so easy, and Restream for all their help. May Mammon be with you all.